The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Hi, everyone. Basil Chapman sitting for Steve Rhodes. My pleasure to be here. I'm usually here the next hour in the Tiger Technicians Hour, and I'm here Monday through Friday on market days, and great to have Tom and John going through the different charts earlier on. And let's look at the numbers. The Dow's down 12 at 17,160. Was down much more before, but come back a little oversold bounce we got here. The S&P is at 1994. The comp index is up 6 at 45.34. Gold is having a bit of a bounce, up 490 at 12.22. Silver's down 19 cents at 17.75. You've got a very interesting situation here because high-grade copper, let me show you something here. High-grade copper HGZ 14 is trading at 3.03. We've been looking for this to go under $3 in the composite index, 3.03. Oh, man, it's just sitting in that extension, the Fibonacci extension, 200% extension. I think it's going to go more to 2.38 extension. However, most importantly, we're looking at bonds right now, and bonds, the TLT is up 19 cents at 114.93. I said to subscribers of my opening call, a daily, very comprehensive newsletter, that until the TLT goes above 115.50s, goes up into the high 115s, we've got to think of this as a bounce. It'll become a lot more than a bounce if, in fact, the TLT can rally and go towards the 116s. Is going to be telling us a lot. In fact, it could be telling us about the market conditions, and it could be telling us that, in fact, money will be transiting. Money will go from the stock market into the safety of bonds. Now, if you go to Tiger TV front page, you will see a whole bunch of stuff going on with the $10,000 in prizes. And that's going to be just a wonder. It was great last year. It's going to be even more spectacular because there's even more information being parsed for your technical veracity, for you to be able to trade. So go to the front page, check out the Natix platform, check out the $10,000 prizes that have been given. You've got until noon this Thursday to sign up for being able to be in the competition, and it's a fantastic competition. If you want to, if you are using Chapman Wave methodology are involved in using that technique intraday, look at this. I drew this chart live while I had gone on. I knew I was going to be doing Steve's show, so I showed this 1 minute chart of the E-minis. So if you're doing those swing trades, those short-term trades, if you're doing those trades that go to the specific hour, and you want to put on different positions, look at this. From the low bar in the E-minis at 1978.25, this is a 1 minute chart. This is not, I mean, most people still look at you as if you're nuts. A 1 minute chart. You can trade 1 minute charts in the Chapman Wave methodology. Look how far it's gone to get from the trough. That's the most identifiable trough. That's how you start the waveform, to the fourth consecutive higher high. Leg D going to a peak D. And that went from the low of 1978.25 all the way to 1986, round number 86. That was D. It actually went higher, where I put in leg E and a peak E at 1987.50, $1.50 higher, and that immediately would go from a plus sign to a down arrow the moment that the technicals crossed negative. So here's a technique that could have taken you from 9:32 this morning to the confirmation. Well, D would have taken you to complete D would have made 9:54. So that's less than 30 minutes. And if you held it a little longer because it was holding that up channel trend line, then you would have gone all the way to maybe 1987.25 at 10.05. So within 30 minutes, you've got yourself a beautiful trade. Consider it, the CD book is available at TFNN. Check it out. Look at that beautiful technique, and now we're coming down. Now, this is very interesting. Let me just talk market-wise. And the dollar is... Well, let me do this. Move that out the way, and now we're ready. This is a 120-minute chart here. Let me show you something. This is the DXY, the dollar index. There's a doji candle that was made at peak E. There's also certain patterns that we're looking at here. But even more important, could have even been another pattern like it, that oval pattern that I call the stork leg formation. But that's not even important. What's important is it took you to an E, and there was a doji candle, said be careful, held the 9-period moving average, that black line, and then spiked high, went to a doji, leg F, and this morning I said, real good chance of we making a peak F here, and if we do so, the dollar could have a high-level consolidation for a little while. But lo and behold, yesterday, the dollar made a peak E in the Chapman wave 120-minute chart right there at 84, let me type that in, 84.86. And now we're trading at 84.49, so 84 point, oh my goodness, I've already forgotten. Did I say 86? Yep, 84.86. memory like a sieve. Okay, so what we're doing here is the dollar's pulling back. The gold is attempting, in its counterpoint move, attempting a leg A. So far, it's gone to a peak C in the 120-minute chart. Seems to be fading, but it hasn't failed yet. It'll fail if gold goes under. On the December contract, it's at 1223.40, up 5.30. If it goes underneath 12, right there, 12.19, that'll say that's a fade. It has to start a brand new buy mode in the 120-minute chart. So far, leg A in the daily has been repelled by the 9-period moving average at 1230.60, spiked a little bit higher, almost to the 1238.60 right here. You see that moving average there, that little light browny khaki color on the 14-period exponential moving average? Well, it pulled back from there. So this is what I wanted to do. I wanted to go through some of the things and explain to you. First of all, my subscribers get this every day. They get the Dow chart right here, with the explanation based on the Chapman wave. I explained this is Chapman wave rogue wave or a right arm extension, and that it should fail and come back underneath 17,161. So far today, the low is 17,115. So it's certainly done that, and it's trying to test that maroon line, the 9-period exponential moving average. We'll see how the day closes out. But we are in the very likelihood we are in at least a sell signal. I haven't got the confirmation of a sell signal, even though we're trading as there's a sell signal. But I'm looking at a whole bunch of things. I'm looking at the way the VIX has gone to a leg C and now pulled back. It should go to, especially at a new recovery high, it should go higher than the 1483 level that we saw as the high today over the next couple of days. And look, here's the 120-minute chart, VIX, volatility index. And this is the 120-minute Dow at a peak F, 17,350, and it pulls back. And it goes trough A, trough B, trough C, leg C down. We haven't got the trough C as of now. When we're looking at the short-term trading index, it gave a fantastic signal on Friday to say that it should be a rug pull on Monday, and there certainly was a rug pull. And now we're back to kind of neutral in that particular index. Even more important is this is the S&P. So we go to the S&P, SPX.X, and the S&P made a leg E and then a peak E in the Chapman wave. This is exactly that right arm extension. It's also the double top U formation. So that the level of 2019.26, 2019.26, and that was made on the 19th, so that's 9/19. Let me just type that in. 9/19 is in fact going to be the level to watch, because a penny above 2019.26 says you've got an alternate wave count, you've got internal and residual strength enough to push the Dow higher instead of lower. It says that the 120-minute chart, which made a beautiful peak F top, when you get to that sixth highest peak in the Chapman wave and the technical start to fail, it can be quite severe, the pullback. So far, it's gone from the 2019 area down to the low today of 1986. But my eye and technical analysis says that we should be making lower lows and lower highs in this week going into the end of September. We'll see if that's going to be the case. But in the meantime, back at the ranch, you've got a leg D, a possible peak D alternate count in the Chapman wave weekly. So that says at D, you've got to become a little nervous, or a little cautious, let's say. And look at the MACD. You see that fast-moving average, the green differential, 9-period differential, is making a little double top against the red line, the slow-moving average, which is called the deflection. And if we deflect lower, and that the histogram continues down as well as the 0% line, as well as seeing the distance between the beta, the distance between the fast-moving average and the slow-moving average expand, as the stochastic goes under 83% and then under 80%, that's going to be a big negative. So far, all we can say is that the weekly chart has not given a single signal. It has to come from the daily. And as such, when we're looking at this particular pattern right now, you could even make a case for, hey, wait a minute, you've got that oval formation that always says be a little careful here, because if you pop to the upside, that could be the neck that you're looking at in that stalk leg formation. So just be a little careful in making decisions. Meantime, back at the ranch, the day is young. There's not even 2 hours into the 3 hours. No, it's not even 1 hour into the second trading day of the week. So we can't talk about the weekly chart as if it's closed. It is still a very active price movement. Now, this is going to be really interesting. The monthly chart hasn't given one signal if you're looking at the price movement. It's way above the 9-period moving average, the black line, and it's in the MACD still good. Relative strength is starting to show signs of weakness, but there are two indications here that tell me you've got to be a little bit careful going into the end of September, the beginning of October. Why? Because if you're looking at the S&P monthly chart, you will find that the candle that's forming now, when within 2 weeks to go of the close of the month, you start to see a doji type candle, it's a heads up to say, watch out, because if there's a close somewhere around this level, a week from today, and let me just double check, I never remember this, that'll be on the 30th of September, that is this coming, a week from today, you better be careful. So there's the break coming up. We're going to talk about the volatility index in a moment. And 877-927-6648 is the number to call. Hey, I'll be right back. Listen to these commercials. They're very important.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Right there, not a single other than the candles themselves, which in this case you could use bar charts because it makes no difference. All I'm looking for is the lows and the highs, the peaks and the troughs. And you could take the naked chart and do exactly the same as I did before. Here is the 10-minute chart without any technical tools. No MACD, no stochastic, no volume, no nothing but letters. And what does it do? It says, this is the technique that you can use. Now, it's not always this easy, but a lot of the times it's just a real simple matter of identifying low bars and high bars. And when you get to the peak trough the trough F or the peak F, that's really where you got to be very careful. In this particular instance, we went to in the 10-minute chart, went from a low of 1982.75 at 1715. That's 515 last night on the 22nd, yesterday. And you went peak A, B, C, D, and then it held very nicely and went to E and F. If you want to put in a trend line, look at the beautiful way you could put this trend line. Look, how does the price, I've always asked this question. How does the price know when it's rising? I understand horizontal because you can remember sideways very easily. But when you're going from the left side to the right side, identifying higher highs or lower lows, how on earth does the price know that it can go to 1985 and then it can move to the next peak at 1986.75? How does it know that the straight line up, the diagonal line at 1987 will be hit exactly and repel the price? And that's the reason why I developed this technique in the Chapman wave of putting in what I call the up track or the down track. So it's there we go. Let's put that in as a parallel. Look at this. Put the parallel in there, and you've got the red line, and that red line says every time you get into this area, you've got resistance and the price should be repelled. Now, you could do the same thing on the downside. You could say, hey, this is support, and anytime it starts to break the support, I'm going to be real careful. And there's the support. And once it broke down right there, after peak F, the doji candle high at 220 last night, 1987.25, it broke that support. And when it went down, it went trough A, B, C, D, E. Looked like there was a great buy signal, but it came back, made the pattern I call the H that goes to an M pattern in the Chapman wave methodology, and it plunges below the left side low bar of 1987.50 and goes to 1977.50 at 8:40 this morning, 20 to 9 Eastern time, and woof, it starts on the way up and it goes A, B, and it's just made a C. Now that C is above the high it was made at peak F at 1987.75, and says there's a good chance that we should make it either a double top or just underneath, but we should make some kind of a peak C1 or a peak D. A, B, and here comes C. There it is. So, there it is. There. All right, price is pulling back at this particular point, but we'll see. We've got time. We're looking at this, and the objective was to get you to a D. Let's see what happens, and we'll put it aside for now, and we'll go back to the market. Now, let's get rid of this. Let's get rid of that. Oh, and this is it with the technicals. That's what I really wanted to show. I wasn't showing you just the Chapman wave notation. Look. The MACD fast-moving average is still very strong. The stochastics at 83%. It suggests that at some point within the next 30 minutes or so, that 10-minute chart will at least have an attempt to try to get back. It was repelled. Where at that 200, you see I've made it a dashed line. Right, not a dash. I've put the little dots on there to show this is the 200 period exponential moving average, and that it's having a tough time. It's like a magnet, and then it becomes a repellent. At some point, it might become a propellant as the price goes to 1988 or higher. But we're just waiting for one little thing to go, and that'll be for one bar to make a peak C, and then another bar to make a leg D, and then you're out the trade. And even here, at this particular resistance, you didn't have to wait for D. You could have said, hey, that is such strong resistance historically, the 200-period moving average, I'm out. I've got a nice little profit, I'm out. Or take part of it off. That's the nice way to do it. So let's go back now. I want you to show you a bunch of things. Oops, we got another break coming. Hey, I'd love to hear some people's voices. 877-927-6648. Warm if you can. Love to hear from you. I'll be right back. Basil Chapman sitting in for the one and only Steve Rhodes.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
My hour, that's the next hour coming up. I will be discussing a little bit more about my socioeconomic political overview and trends watch type thing. And I will be discussing Ebola in the Den. Flesh just posted that the United States Centers for Disease Control and Prevention, CDC, is expected to release a report Tuesday predicting as many as 550,000 to 1.4 million cases of Ebola virus in Liberia and Sierra Leone alone by the end of January. This is kind of serious stuff. You know, it reminds me of before World War I, just after World War I, actually, there was that world epidemic of flu, 1917, I believe it is. A lot of things that happened at the beginning of centuries, and you've got to be real careful. So I'm going to be talking about that, as well as a couple of other things. What I did want to look at right now is why is auto sales making an all-time high of 61.29, making a peak F top. I'm almost sure it's a peak F hat-trick top in the monthly chart, a peak E in the weekly, and it made a peak D in the daily, and then gapped down on earnings news. Earnings was not bad, but the projection going forward was not that good. And it's under the 200 period. This, to me, is just really important. When you put it together with Ford trading now in that H pattern, the lowercase H pattern that I always talk about in the Chapman wave methodology, going a straight line down, then you make that arch formation. If Ford breaks under 1616, and I have to tell you, I'm mystified because everywhere I go, I've always, as long as I was from 4 or 5 years old, I remember distinctly always looking at automobiles, looking at designs, looking at a whole bunch of things. I used to do a little racing now and again, not legitimate racing, but racing nevertheless. And I had a little motorbike, did the same thing. And I've always just been fascinated with design, automobile design, and what it tells you. And I remember doing a study years ago saying that engine capacity, and I remember showing a picture in 2000 for my subscribers to my service, Market Line service, my institutional subscribers, discussing how engine size invariably created tops. You know, in 1969, the back of the fenders of the car were about as heavy as the entire car. You remember that? Those huge bumpers and back bumper and front bumper, they were massive, and the engines were huge. So I look at style, look at design. I remember in 2000, that's when the first really big truck became a vehicle for families. And the size was just at that. Now we're all used to it, but at that point, the size for a vehicle that you went to the supermarket and tried to park, it was huge. And that, in fact, created some kind of matching top to go with that skyscraper, the Chicago skyscraper, that was advertised as the world's tallest building in March of 2000 in Popular Science. Well, so I'm looking at Ford, and I'm saying, everywhere I look, I see more and more Ford products. I like them. Every time I look in my mirror and say, hey, that's cool. It's always that grille that reminds me of the 66 Ferrari in the, what do you call it? It's the Focus and the Fusion. And they're nice little cars. And the Fusion, in fact, is a terrific car. I haven't driven one. I did drive a Chevy the other day, a Cruise. I had to do a quick rental, and I did that. And it was fun. It was good. It wasn't great, but it was really... I mean, it's just a different category of car altogether, the cars of today, the American cars of today. They're very European. In fact, they've taken the best of the European and the best of the Americans. They've tried to put it together. Quality is just not quite there in most of the cars. It's getting there, though. So when I look at this, I'm mystified because something's going on. Maybe sales really have slowed down. But it looks to me like more and more American cars are being bought than certainly Japanese cars. So what I'm looking at here is that Ford has given a signal that says, I'm in a trading range, and there's a good chance I'm going back to the 15s. I have to test it before I can do anything on the upside. So I'm watching it real closely. And if you look at General Motors is the same thing, making that H formation, fading to break above the peak D high in the monthly chart of 41.85, trading at 33.35. The Fusion copies the Aston Martin grille. Yeah, that's right. It's cool. So anyway, back to the story that we're looking at here. One of the reasons why we went so heavily short, this is the most short that we've been in my subscriber service, my opening call service. And one of the reasons is, look, even the QQQ series, which looked like it just couldn't make that leg D, eventually popped up with their D. That was the day Apple made that announcement, and there was a big pop-up, so it helped the Qs. And then the Qs pulled back quite sharply to 98, and then it popped up to 100.56, and is now making a pattern that says, be careful. Let me show this pattern here, because it's a pattern that says, I could very well make the kidney shape. Now, people say, kidney shape? You've spoken about all these different patterns, stalk legs and everything. What the heck is a kidney shape? Well, it looks like this. Actually, like a heart in a way. You've got the H over there, and then it pulls back, and then it forms another quicker H. That's that right shoulder failure pattern, right? There it is. MACD's fading, stochastic's fading. This is in the daily. The Qs they're going to have a difficult time as I see it. The monthly chart is fantastic. There are three indications that say, watch out. This is a period to be really careful in the monthly, but the signal's not there. My eye is just saying that because of what I'm looking at. But the weekly chart is saying this long-legged doji in the QQQ series, trading right now at 98.89, down 16 cents, has a high of 100.56. That's the recovery high, not the all-time high, the recovery high. And it has a low of 98.05, and it looks like it wants to go down and test the 98.05. If it breaks under that and holds, it'll be the first time. Now, this is an amazing technique. If you can develop this technique, look at the 9-period exponential moving average in the QQQ series. Since they broke above that black line in the week of the 2nd of May of 2014, where it went to 88.15, it has not closed underneath. It's touched it a few times, but it has not closed underneath that black line yet. I think that in the next 2 weeks we're going to see that. And you got to be real careful. So that's what I'm looking at there. If you look at the IWM, not good at all. IWM under the 200-period exponential moving average in the daily, after making a peak E at 117.80. The RUT 2000 ETF has made the H pattern in the the H pattern in the weekly right there. Look, here's the H pattern coming up. I'll talk about that in a moment. In fact, I'll take the break. I'll take the opportunity. I'll talk about my CD introducing the Chapman Wave methodology, where these patterns are discussed in great detail, and there are examples and exercises where you can look at them. Look at that. There's the H pattern. The best is that H goes to a lowercase m pattern, lowercase h to a lowercase m. Then it breaks down. Well, what is that pattern? That's the pattern we've seen in the GLD. Remember? GLD. Look, GLD. Drew it ages ago. Look at this. Look at that. The H, this is the pattern. I only added that the other day. But this was drawn about a year ago. The H goes to an M pattern. H to an M pattern. And what happens to the GLD? This is going to be so important. My sense is that the dollar still has some strength and that there's going to be a high-level consolidation and that gold is going much, much lower. And the best it can do is maybe bounce from 117.5, touch 121.04, and then come back down, if it can do that at all. The MACD is still not good, and the stochastic is still going down at 12% in the weekly chart. So I'm not that impressed. If you look at the dollar monthly, weekly, this is only leg C. And the MACD is strong. The stochastic is really strong at 95%. Silver question in the den. When I look at silver, absolute pleasure. That's what I'm here for. Silver at SI. I'm looking at the continuous contract for now. The H goes to an M and then fails. This is the first. Actually, silver's a little bit better at 8.5.9%. Horrible, horrible, horrible. But there's a little chance of a doji candle here that says that silver could bounce from 17.76. Let me give you the exact contract itself. Silver could go from 17.76, it's the same thing, and try to hit 18.94, the 9-period exponential moving average. But believe me, when you look at the monthly chart of silver, look, I have to go to the continuous contract to show you some real action. Look at this. Continuous silver contract, peak E in the monthly, hitting that 200% moving average support, starting to break that support. No strength whatsoever in the technicals. The technicals rallied and the price couldn't do that. It actually failed. No, not good at all. I'm sorry. Silver to me just looks very, very weak. And it's below the left side low bar of trough E at 449. So this is not good. So let's just go back to, so that was a question there. And I'll just show you high-grade copper because high-grade copper is doing the same thing. All these metals are just not doing very well. And that says that stocks, in fact, looking out should do very well. But on the shorter term, let's just go through some of these stocks, the very important ones. Let's look at Google, G-O-O-G. Google, struggling here, went to a leg D, now it's a peak D in the daily. There was a peak C1, C2. So Google is in, at least for now, is in a trading range. The weekly chart says there should be a rectangle formation with an arch formation like that appearing in Google, and it should retest that whole area of 500. It's at 558 right now. That's going to be the big test, 503, 502. How does it hold that level when it comes back down there? Less chance that it's going to be able to break at this particular point above 614 to go to the 618, 622 level. I just don't think it's going to do that. It's stuck in a range right now. Even the 120-minute, the weekly chart is doing the same sort of thing. Let's look at Priceline, PCLN. price line, same pattern. There's that rectangle pattern. Wow, those are formidable. And it's making an arch formation. Looks like price line is going to retest the 1,087 low of May. It's trading at 1164 right now. And the arch formation in the weekly, these patterns just repeat over and over and over. When you get to know them, they become your friends. There's no mystery attached to it. Now, let's just go to the daily. The daily made a peak D. I didn't even put the down arrow in. That should be a down arrow right there. And you go plop. And that high of 1,329.90. Am I going to remember that? 1,329.90. That was made in August 8/11/14. So 8/11. All right, so we've got a situation here that even price line, which is one of the really tremendous charts, is starting to fail. Anything else? GoPro, what was a question? Oh, GoPro, nice move to, oh man, we missed this, such a great looking stock. Making a double top perhaps here, unless it recycles higher. Let's say the 71.42. So today's high 71.50. So this is going to be AB. This could be a brand new little buy mode right here. I think it's got a lot of, at 300%, it's going to be 74.13, the extension. So 74.13. It's acting well. If you have it right now, Jay in the den, Jason, this looks like it's going to... Let me just go to the 120 minute. I don't want to talk about it unless I'm really sure that something's going to happen. There it is. Oh, okay. A, B, C. This is leg D in the 120 minute chart. It's above the resistance line, what was the support line, now resistance. Yeah, I think it's acting well, but I got a feeling it's going to top out between 71 and 72.20. That's my guess. I'm going to give it the cup formation right there. And that's my thinking right now. That it's real close to coming down. Might have been recommended or something like that. Stock that I really would like to buy, just because it's the sexy stock du jour. And it's showing buying pressure, and that's good. So it has not come down. I want to see the 59 to 57 area. That, for me, will be the test, and then I'll make some decisions for subscribers. Okay, that was question. Yes. Now, here's another thing that I want you to show is the VIX index. VIX.X. Look at this VIX index. Spirals up into leg C in the 120-minute chart. The daily chart is in /F/A. Now, what would I say about the volatility index at this particular point that would make it an A, and what would I say about it that would make it an F? An F would be very negative, and an F would be this extension down here. Let me just grab this line. Okay, so what we've done is we've gone above it, haven't closed above it. So that's the trend line we're going to look at as strong resistance. I'll just make it a dashed line for now. Okay, that's strong resistance right there. Let me just see if you can see that. Yeah, you can see it nicely. Okay. In this particular instance, the volatility index, and I made a big deal about it over the last week, the volatility index has been making higher highs and higher lows in the daily. There was a very ugly turnaround back on Thursday, Friday. But what's really interesting is the weekly chart is starting to improve tremendously. I'll be back for the last segment of the show, and then I'll be doing my show. So Basil Chapman sitting in for Steve Rhodes. Dow's down 35. S&P is down 3. I'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
One of the reasons why I'm looking at the defensive, not the defense, not Raytheon and those stocks, Lockheed Martin, but the defensive stocks like a Procter & Gamble, like a Coca-Cola, holding quite nicely now. That tells me that money is drifting from, well, migrating from the more speculative stocks or the higher beta stocks to the lower beta stocks, to the ones that give good dividends and are really considered to be safety stocks. And that, to me, is very important because it tells us about, well, it doesn't just tell us about the market overall, but it tells us where the smart money is trying to go. Question, hi Basil, Max from London here. Would you take a look at SQM if you have time? SQM, what does he say? Would you take a look at SQM if you have time? I'm in it from about 27.30, but it's not setting my world on fire. Not really showing any strength on the upside, although holding at the sign of strength lows from 226.14. Wondering if I should just dump it with apparent weakness in the general markets. Cheers, Max. Cheers. Max, SQM is Sociedad Química e Minera. ADS. Well, that wasn't very good. Butchered that one. This is ABC. Peak seen is starting to fade on the weekly. Monthly chart is trying to hold the 200-period exponential moving average, but the daily is showing some signs that there's an attempt, at least, to form a base. This is what I'm going to suggest to you. Hi, Basil. Max from London here. Would you take a look at I'm in it at about 27.30. So you're in it. You got about, a whopping 26-cent gain. Okay. But it's not setting my world on fire. Not really showing. Okay. All right. 26. We don't have too much room here. Let me do this. I'm going to make two suggestions. You don't have to just jump on it right now because it's showing strength the last few days when the general market's been weak. So this could be, in fact, Sociedad Química Minera. So this is a bank of sorts, I guess. And I'm going to make it real easy. If I was in this and I was looking at it, I'm waiting and waiting patiently for the weekly to start to get to 29.30 to start making the 9-period moving average support instead of tremendous resistance. But the resistance is more like a magnet. I'm saying, hey, it's held up so far. I'm going to make two suggestions. One is that 27.56, I'd make my stop, make it $27 so that you lose 20 on some part of it, but give it a little room. Why? Because if it holds and it actually goes above the high of the 19th to goes to 27.75, that's really nice action. And then I would raise my stop on that part that I was looking at now because it will still be intact. And I'd just keep it as a fairly tight stop, maybe your entry price. Make it your stop on your position, half a position. And the other half I try to keep as a core. And I'll tell you why. There's a potential W formation rather than the H that goes to an M pattern. Why? Because it had a higher high than that low bar of 26.67. So that's my recommendation. And you know what? Today's Tuesday, Thursday. If I get a chance on Thursday, if I'm here, or Thursday or Friday, I'll look at it again. But that's my suggestion right now. You've given it a little room. Give it a little more room. But I definitely would not let it go under 20. Well, I don't know if you want to stop at 26.66. It's less than a point. Probably, if you're in it and you're a little bit nervous, I wouldn't give it much room at all. But at least one part of my position, I would have a fairly tight stop. Hope that helps you, Max, and thank you so much for listening. Thank you very much for emailing me the question. So that's SQM trading at 27.53, up 16 cents. I'm going to put it down. I'm going to try to look at it again later in the week. Oh, that's the break. So, folks, stay tuned because, I didn't even give you a chance to look at my CD introducing the Chapman Wave methodology. I'll do that in my show. I'll show you some of these patterns that repeat over and over and where you can find them, what chapter. I'll be right back. Stay tuned for my show, The Tiger Technicians Hour. Be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.